Hi, we're going to look at Olympus Dao data that you've probably not yet seen. So in this video, we are not going to talk about the fundamentals, right, around tokenomics or around whether or not it's worth right now to get into Olympus Dao or various Ohm forks. Instead, we will look behind the scenes. It's likely you already know some of the charts we're going to look at, but very likely not all of them. And in the end, the more data we have, the more informed of a decision we can make. Now, Olympus already shows quite nice statistics on their website itself, right? So we don't have to go through those. The problem here is that the time window is also relatively limited. But with the charts presented over here, we can zoom out a little more. The link to all of those charts are in the video description, by the way, so feel free to check that out. First, we've got the most obvious statistic. That's the market cap of Olympus Dao, of the Ohm token. So in the beginning, we basically grew more or less exponential, more or less constantly. Then came the turnaround, which was around December of last year. And since then, not just Olympus Dao, but all the Ohm forks, they really had a tough time. And since end of February, this is consolidating somewhat, right? The crash, it has stopped to a certain degree. Now, there's always the question, does it make sense to buy when there is blood in the streets? So to be greedy when others are fearful, because this is definitely currently the case. And so it's interesting to look at the market cap of Olympus Dao to the market value of its treasury, right? The treasury is currently at 517 million, whereas the market cap is at 759 million. So the market cap has really collapsed, right? It went from 4.3 billion to 0.7 billion, basically. The treasury has been way more stable. And why is that? It's because a lot of the treasury is simply stable coins. Stable coins or Bitcoin or Ethereum. So of course, Bitcoin and Ethereum is also falling, but the stable coins are not. And so that's probably the reason why this negative momentum here in the market cap could stop and didn't proceed further. The backing per Ohm token now is pretty high, relatively speaking. The premium you pay on that intrinsic value is comparatively low, at least compared to the past, right? 4 billion was the peak in market cap of the Ohm token. 0.9 billion was the peak in the treasury market value. So the backing per Ohm, relatively speaking, in terms of percentages, it went up. Now, there isn't just Olympus Dao, there's also Olympus Pro, a comparatively new product that tries generating yield without having to sell Olympus Dao bonds that might dilute the token supply even further, right? But relatively speaking, Olympus Pro is still comparatively small. Look at the size, this is 2.2 million. So it's nice that the overall momentum is positive. It's nice that there is some adoption. But in the grand scheme of things, right, this is just a drop in the bucket. 2 million versus 517. At the current state, it really doesn't move the needle, but it's nice that some kind of development is happening. But right now, it's definitely not sufficient. So given that when you buy now the Ohm token, that a lot of that value is simply its intrinsic value, its value in the treasury, how much risk is there currently in that treasury? So how much risk-free value do we get? What's the risk-free value relative to the market value? That's this graph over here. So with the decline of the risky assets within the treasury, the proportion of risk-free assets in that treasury also went up. So we are now looking at 47%. So the delta of the backing per Ohm token versus the Ohm token's price is comparatively small. The premium is low. And of that backing here, half of the money is basically cash. So when you're buying 1 Ohm, $25 or so roughly is simply cash. It's completely risk-free. At least risk-free in terms of price movements, right? Stable coins, they still have some kind of a risk. The risk of depegging from the US dollar, but let's not discuss that. It's comparatively small risk compared to the price movements of the other tokens. Now, one of the great innovations of Olympus Dao was to own its own liquidity, right? It's a project that owns LP tokens and thus directly benefits from active trading in and out of the token. What does this actually mean? When you go to a decentralized exchange, such as SushiSwap, you swap your stablecoin to, for example, the Ohm token. And during the swapping process, a swapping fee occurs, right? This fee goes to the liquidity pool provider, so to the people or projects that provided the money in the first place for that pool. People buy in and out, swapping fees occur, and those fees go to the people that hold the liquidity. And so This chart over here, the LP fees, the liquidity provider fees, is an indication of how much money is the Ohm Treasury making from holding those LP tokens. And of course, now there's way less attention on Olympus Dao, right? Less swapping is happening, thus less fees get generated. And currently we are looking at approximately $55,000 per day in revenue. Before we were looking at maybe 5 times the value of that. Here we see the details of these liquidity pool tokens. So whenever you provide liquidity, you've got a pair, right? You put in 50% of the value in one token, 50% in the other. And so we've got here all these pairings: Ohm versus DAI, Frax, LUSD, Lobi, and ETH. And what this indicates is when you are buying Ohm and you don't want to use a DEX aggregator such as 1inch, if you're directly swapping on SushiSwap, your price impact will be the lowest when you swap against DAI. So you're moving the markets the least when buying or selling Ohm tokens versus DAI. That's where the LP by far is the largest. This chart here shows the total value locked, so the staked Ohm, which I think doesn't really bring a lot of additional value simply because this is highly correlated with the Ohm price, right? The higher the Ohm price goes, the higher the value of that staked Ohm goes, and vice versa. But what might be interesting is the discounts that you get when buying Ohm bonds, right? When you go here to Olympus Dao, you can buy bonds. So the reason why you might consider this is when these returns here are positive, which is currently not the case, you will get a discount on your Ohm tokens upon purchasing. So you will lock up your Ohm tokens for 5 days. You don't have access to that during that time, or at least you have to partially wait, right? This gets unlocked over the 5 days. After 2.5 days, half of that money will be free again. And you want to look at what's the kind of discount you get compared to the current market price. Right now, you even overpay compared to the market price. This is not the usual scenario. Usually you get a discount and that's why you might want to buy them. You also see this is constantly updating. So when we look at this historically, this is what we are getting. This is the discount measured in percentages. So it used to be at around 8 or 9%, and currently the discount is at around 4% or so, averaged out. But we do see these spikes, and we do see times where we don't get any discount. So that's here the 0 line, and currently we are in such a brief period where we don't get any discounts, where it does not make sense to buy the bond. So never buy the bond when you get a negative discount here. This is not a profitable strategy. Now there's one more chart to come. I think it's the most interesting chart of this video. If you so far enjoy this content, feel free to subscribe because I publish videos regularly. So here's that chart. It's the holders over time. How many wallets are entering and exiting the system? And the peak over here was in the middle of January of this year. Since then, we see a gradual decline, but that decline is by far not as massive as the market value, right? This is interesting to see that just a simple consolidation, a simple deceleration, a halting of that growth can depress the market value that much, right? But that's what we are seeing. And so now the final question is, can this floor price over here, can this help turning this all around? Because a lot of the risk seems to have already materialized, right? People that wanted to sell have sold. The current risk in the system might be somewhat limited. The backing is high. The proportion of stable coins within the treasury is high. The number of holders isn't declining rapidly. It's just consolidating. So I'm not going to make a judgment call of whether or not it makes sense to invest in this, right? I personally don't hold any Ohm tokens. I don't participate in Olympus Dao. But if you're invested and if you have taken the beating here, selling right now is probably not a wise idea. The risk to reward right now, at least to me, looks way better than 2 or 3 months ago. But in the end, all these charts, they can just help with speculation. They can't provide definitive answers. It's all about tokenomics. It's all about market dynamics. Simply take this video as an additional source of information on your journey to do your own research. Feel free to check out the premium membership. That's the video over here. I publish regular exclusive content, tutorials, market analyses, and of course, there's also a private chat where you can ask me any questions. Thanks for watching and see you next time. Bye-bye.